What's going on, everybody? Today we're going to be breaking down what a SAR is and a NOV on a VA appraisal. I've mentioned it in the past, but I didn't explain it. So this is really more technical, but this is what you really need to understand because a lot of veterans have questions around the appraisal process. So first off, just to kind of clarify things, is that when you go under contract on the property or you're thinking about doing or you're wanting to do a cash out refinance, on a VA loan or any type of VA loan that requires an appraisal, the first step is going to be for the lender to send you out a loan application. And once you sign an application, specifically an intent to proceed, which then you want to work with that lender, then they can submit that request to the VA for the appraisal to be ordered. Now, what happens is that the VA has a certification program with appraisers that are specifically catering towards VA loans, right? So they're not essentially like VA employees, like people think, like, well, they're VA appraisers. That's not the case. They're actually third-party companies or individuals that get certified with the VA to do those type of appraisals, and they take all the training necessary for them to deliver a appraisal to the underwriter for them to review it. Okay, so now that's kind of where these other pieces come into play. And if you guys have questions about the appraisal process, drop them down below. I know I did another video about it that went in more detail with some of the minute things that you need to understand about the appraisal. Today, we're going to kind of give you an overview of what are the details of how the appraisal is actually processed once it comes in and where issues could be identified and resolved. So let me first share with you guys this screen here. So the SAR, which is a Staff Appraisal Reviewer. Now, lenders will have these, investors have these. So if they're underwriting the loans, they're going to normally have on staff on hand that is SAR certified, right? So they're not all of them are going to be SAR certified. So only a couple of people may be at a financial institution or brokerage, whatever the case may be. What they do is they then review that appraisal. Now, that's what we're going to talk about. Next is going to be talking about let me just pull it up for myself here, which is going to be the notice of value, right? So you have the SAR, that's the actual person that reviews the appraisal. They are the ones that issue the NOV, which is the notice of value. So then when you get a copy of the appraisal, that means the NOV has been issued. Why that's important is a couple things. One, every market has a different appraisal time frame to be completed from the time an appraisal is accepted. So let's say you have an appraisal accepted on a Monday, and they typically have 10 business days around, depending again where you're at, to get the appraisal back. Now, that's the max amount of time. Normally, we've seen it come back sometimes in 24 hours from the time they do the appraisal, but not all appraisers are created equal, and some of them take the max time, and sometimes they go over it depending if there's any type of issues that are coming up on the appraisal, like Tidewater. That's where the appraiser's having a hard time coming up or getting the value of the purchase price, which, by the way, is the only loan product out there that does that, and that's why I think it's also pretty phenomenal. They notify the lender then notifies the realtors, and then from there, what they're going to do is they will submit those comps to the appraiser, and then the appraiser comes back and says, okay, the value came in higher, we're good to go. So those are some of the things that can delay that process. Now, let's talk about the notice of value. So now, this is part of Chapter 13. Now, look, guys, this isn't necessarily that exciting to go through, but you need to understand it because a lot of you have questions on it. And I'm going to kind of skim over this document as well. There's definitely a lot of pages here. There's actually only 20 pages, but the things that are relevant, I'm going to walk you guys through on that process. All right, so the first thing I want to talk about is going to be the appraisal uploaded to the web LGUI. That's like an access point that we have access to as lenders. That's where we can request a certificate of eligibility. We can contact the appraiser, all of that. But the SAR also has that to be able to issue what's called a notice of value. Now, the purpose of the NOV is to inform the veteran about the results of an appraisal report and conditions that must be met for guarantee of the loan. The NOV explains how appraisal reports differ from home inspections and suggests that the veteran may wish to obtain a home inspection. Now, this is very important. For a couple of reasons. A lot of people think like, oh, I got appraisal, I don't need a home warranty. The home warranty is not required per the VA, but the VA does encourage you to get it, and I encourage you as well to get it, and you should be attending these home inspections because there's a lot of things that come up on there, and the reports they kind of amplify it, and it may not be a big deal. And we've seen people cancel contracts where I'm like, man, that was not necessarily that big of a deal. Relatively easy to repair. So things to consider. Now, the NOV reflects conditions required for the loan to be guaranteed. This is another big important piece. So, when people think of a VA appraisal, right, they sometimes get worried that, oh, the VA has so many requirements, it's going to be a nightmare to be able to do the loan. That's not the case. Look, I've done thousands of these. We do hundreds a year of these deals. And most of the common things that maybe come up as far as an issue, it could be like peeling paint. But that's probably the minimum property requirements, which I'm going to cover here in a second. But it's important to note because they do kind of say that the NOV reflects conditions required for the VA loan to guarantee it, right? So that's kind of those minimum property requirements that exist per the VA. And I'll do a whole separate video on that because there is a lot of requirements. But majority of time, from my experience, it's like peeling paint, and you can get waivers on that depending on when that property was built. And primarily, they're looking at lead paint, which I believe the Lead Paint Act was from 1978. So homes typically built after that, you can get a waiver on that piece. So keep that in mind. Another thing that when an appraisal comes in, it's going to note what the value of the home is, right? And then again, that is subjective based on the appraiser, because you could ask 5 different appraisers to give you a value on a property without a sales contract, because that's kind of like cheating. And they can give you, and most likely they'll give you 5 different appraised values for that home because they use different comps. And a sales contract kind of lets them, gives them an idea of like, hey, this is the target number I need to go for. Okay, so keep that in mind while you go through that process. All right, cool. So since the NOV reflects the results of the appraisal review, lenders and servicers should refer to the NOV, not the appraisal, for the reasonable value, repair requirements, and all other appraisal-related conditions required for the loan to be guaranteed by the VA. So typically, well, actually, no, we're going to cover it here in a second because there's so many things that go into it. So SAR certification, basically certifying like, hey, they've reviewed everything. They reviewed the VA's minimum property requirements for appropriateness, completeness, and consistency and accuracy of the fee appraisal's reasonable value determination, right? So they're basically just saying like they've reviewed everything. They've matched up everything against the VA, and they've said that this property meets those requirements. Now, that SAR is personally responsible for reviewing the appraisal report, which that's their whole job, right? Concurring with the fee appraisal's recommendations, right? That could be any type of issues with the property, grade, or anything else. Did not exert pressure or undue influence on the appraiser to change information or to reach a predetermined value for the subject property in order to accommodate the sale price or mortgage transaction. So basically, if you guys don't know, one of the big reasons we've had issues back in 2008 is because appraisers were being pressured, or they did it themselves to get business. Basically like inflated prices. So if the appraiser goes out and does the appraisal, but now they're pressuring to say, hey, you need to change this, you need to change that, because they want to influence the value, that is a no-go. A lot of times with the what's called a reconsideration of values, that if a value comes in at X amount of money, but you want it to be higher, there's avenues to do that. And it's actually also covered in this. They're also going to determine that the appraiser used methodologies that were appropriate and reasonable in light of industry aspect appraisal techniques. So this is just making sure, again, they're just kind of staying up to the current standards. Next one, property eligibility. The SAR must ensure the property is eligible and appraisal report needs VA guidelines as outlined in Chapter 10. So that's basically like the minimum property requirements. But you guys could also check out those different pieces. Eligible properties, right? Basically just making sure that, yes, this can be guaranteed by the VA. Minimum property requirements, right? So the SAR must review the appraiser's recommendation for any VA minimum property requirements, repairs, and ensure that the property meets the VA's standards. So safe, sanitary. Again, the biggest thing we see for these subject to repairs on appraisals is going to be peeling paint. Sometimes it might be like smoke detectors. But that's generally it. We don't really see massive renovation, massive issues. And remember, you can buy a property as is. I'm not an attorney, and you do have to check with which bank could do it. But you could sometimes do what's called a escrow holdback, where the lender could fund an account that will pay for the repairs. Lender holds it, but typically you do have to get those repairs done relatively quick, and typically they don't allow for safety issues to be done that way. But you can also request a waiver for repairs with the VA. The lender definitely needs to be experienced with VA loans. Like us, we're very experienced using VA loans. Like I said, we've done I've done thousands of VA transactions myself. So if you guys want to schedule a call with me, go over your VA home loan options. Down in the description, you guys will see that link. Property not eligible, so SAR must not issue an NOV for a property that cannot reasonably be expected to meet eligibility or VA's MPRs prior to loan guarantee. So those are important things to understand, right? If let's say you go under contract, and not every realtor knows all these minimum property requirements. So what can happen if you don't work with somebody that's experienced is that you can be going out to properties, making offers, putting all this money into home inspections, thinking like, oh, this is going to be great. This is a go all around. And then find out that the VA appraiser comes back with so many conditions that the property can, potentially fall apart. And we normally see that when it's a couple $1,000s. There's maybe backup offers that are cash, or maybe different type of financing that are not as strict as VA per se. I say that loosely because that's kind of like one of the objections that realtors have when it comes to accepting VA appraisals. But again, it's far and few in between. But the people you're working with must understand what condition the property's in and will it meet the VA's requirements. Just because it's outdated doesn't mean it's okay. You have shabby carpets, you got pink bathrooms, it's okay. I got the same thing in my place. I bought an outdated home that I'm going to be renovating. So you shouldn't be scared about that. But you should be worried about the opposite, is that people that don't know the process, that think it's extremely hard, and then you end up losing on homes that you didn't have to because they thought you couldn't purchase it because of the VA loan. So be careful with that. You guys could always reach out to me if you guys have any questions or you have any concerns. That way, I'm happy to help you out with that process. Okay. NOV to reflect the appraiser's estimate of market value. So important to know, once the SAR has determined the appraisal report is acceptable to the VA, the SAR must issue the NOV in Webley, right? So that's based on what the appraised value came in at. So now you can get a copy of the report. So that's why sometimes people are like, well, the appraiser came out like on a Tuesday, and they're like, oh, when are we going to get the report back? It's based on what region and area you're in. And they typically have X amount of business days to get that back. And then once that comes back, then the SAR has additional time to review that appraisal to then issue it to the veteran. So that's why sometimes, people that are out there, I'll be like, hey, we got to wait for the NOV to issue that appraisal. And they're like, what is that? And that's what it is. Okay, actions after the NOV has been issued, veteran must. So these are a couple things that I briefly touched on. So if the appraiser comes back and says that they're subject to conditions to be met, let's say, I don't know, peeling paint on the, let's say the door trim and some of the windows, right? That's like a typical one or common one that'll come up for that. And they still don't come up that often. I'm just saying, based on those repairs that do come in, that's typically the one. Okay, unless it's new construction, then you're going to have maybe punch list items that need to be done, but let's focus on existing homes, okay? The veteran may request a waiver. So let's say the home was built in 2020. And remember, we talked about the Lead Paint Act, 1978. So basically, a home was built after that. It has some peeling paint. And you say, you know what? We're not concerned about the peeling paint because there's no safety hazard here. Okay, then you can do that, right? Then you'll submit it, and then the VA can accept it. Or if they don't accept it, then they'll let you know, like, hey, you can just do an escrow holdback for these repairs, and the lender has to also be able to do that. So keep that in mind. That's part of lender overlays. Some of them won't let you do that. Another one, an example of that, which is I think is a good one, is let's say you have a dilapidated shed on your property. Well, the VA is going to ask you to also repair that, but you can ask them to omit that structure from the appraisal. Now, no, it does omit the value as well. So if there's value to it, it'll take that away. Another part is that once a notice of value is issued, right, leading up to a notice of value being issued, if the appraiser can't get or is having a hard time getting the value, let's say you're trying to buy a $200,000 house, they're having a hard time getting that value, they're going to reach out with Tidewater. Lender has, X amount of time to be able to contact the agents for them to provide it, and then they provide that to the appraiser, and then the appraiser is going to finish their report. A couple important things to know. When you don't work with experienced people, I've had this happen multiple times, and I don't understand what the mentality is. This is regarding realtors. Is that they just won't submit them. They're like, well, I've never had to do this before, and I won't submit them. And then the value, so we don't submit it because they don't want to do it. And then value comes in, maybe 10,000 lower. So after the NOV has been issued, right? So, hey, the appraiser reached out for Tidewater, you submitted comp, so you did it, and they made their own decision. Now they've issued their report. So let's just say for this example, $200,000 is what the purchase price was. The value appraisal came in at $190,000. Okay. Now, when that happens, you can do a reconsideration of value. It's a process. Lenders do it differently, but basically, you provide like a grid format comp adjustments that's submitted to the VA. VA then will review it. And we've had success with it where they'll review it and say, like, yes, this value should be a little bit higher, and they'll come in at a higher value. Not every veteran wants that because you do have the VA escape clause that you sign at closing, at time of application. That if the appraisal comes in lower than your purchase price, then you have the right to get a refund of your earnest money. But some people just want the home; they don't care what the difference is. I'm going to skip through a couple timelines. I mentioned this briefly, but the SAR must issue the NOV within 5 business days from the time the completed appraisal is uploaded into Web LGY, unless there's a delay beyond the SAR's control, which can happen. Weather-related disasters, all those things are going to delay that process. All right. Now, a couple things I want to note when it comes to additional requirements. Okay. So this is important to understand because this comes up for veterans for a lot of veterans, because I get a lot of these phone calls, right? And remember, I'm a lender, so I can help you with getting the VA home loan. Is that while like additional requirements and specifically overlays. So while lenders may require additional documentation over and above VA requirements, often referred to as lender overlays, items that are not required by the VA must not be included on the NOV. So this is kind of like the weird thing that's out there. And I'm going to be creating a whole separate video about why the VA loan is so different everywhere you go. And because I'll talk to someone and be like, well, hey, this is how you can do it. And they're like, well, my lender told me something else. And then this lender told me something else. And I encourage you, I did a video on how to contact the VA. You can actually reach out to the VA yourself and ask them the questions or the things that we're talking about. Because majority of this is coming from the VA handbook that is publicly available, like this document. I'm going to link it down below that you guys can take a look at. So if a lender has an additional requirement that's above the VA's to make your loan work, that can happen and that your loan can be denied. A lot of lenders don't realize you can ask for waivers. A lot of times they don't do them because they just don't have the capability to do it or the know-how to do it. So that's why those issues come up, and sometimes they come up at the end of closing. I want to make a point on that as well, is that when you go under contract on a property, you typically want to be within a X amount of time frame for ordering that appraisal, depending on how fast you're trying to close. And I'll give you guys some real world life examples of what happens. So someone comes and says, "Look, we need a 21-day closing, right?" So that's just again, this is I want to mention this for educational purposes only. This is my experience working with VA loans across the country. Someone comes in and says, "Hey, I want to close in 21 days." Well, typically, you got to order that appraisal right away, because if something comes up, you have the 10 business days. 21-day closing includes the weekends, right? So now you start taking time away from that. So it ends up being like less than, let's see, about 18 days or so. And 10 business days of that is going to be an appraisal. That's if you order it right away. So that's something you have to consider, because typically you pay for that appraisal up front. So that's something you want to consider in this process. Because if, let's say, you have a home inspection that you want to do, and what happens if you cancel the loan because of the home inspection, but you pay for the appraisal? So those are things that you have to consider when you're going through that process. Now, typically, like for me, when I bought my place, I did not care. We're buying this place no matter what. So I ordered the appraisal like day one. Contract, loan documents signed, ordered the appraisal all within the same day, and then submit it to underwriting in the same day. Now, we have the capability to do that, right? That's just, it requires a quick response force to be put together, and then we can do it. But that's all based on what you want to do. And that's based on each individual, because everyone's going to have a different take on it. Now, there's a table of NOV conditions, right? These are conditions that would be required per the VA. And I kind of highlighted the most important ones. So wood destroying insect, right? One thing I'll note, a wood destroying insect inspection is not required on units in low-rise or high-rise condos, units that are stacked vertically, unless the appraiser notes a potential infestation problem. For site condos and villas or townhome-style condominiums where units are not vertically stacked, inspection must be required on the NOV unless evidence of a treatment guarantee has been provided by the homeowners association. So what happens sometimes is they'll actually treat the ground for termites, and they'll provide documentation for it. Now, when it comes to this condo piece, that's going to be on low to high-rise condos, but that's second units or above. Ironically, they still need them on first units. And some lenders, also depending on what the SAR says, like if there's absolutely no termites in that area, they might waive that condition all the way. And note, there was been a big change a couple years ago that anybody could pay for the termite inspection, including the veteran. Lien supported assessment, that's just making sure that if it's in a planned unit development or condo, mandatory homeowners association fees must be shown on the NOV, so basically just shown on the appraisal. Now, if it's a condo, we did a bunch of videos on condominiums with VA loans, but if the condo is in condition accepted by the VA, that basically means that the condo is VA approved. Now, you could check out the channel. We did a bunch of videos on doing VA condo waivers. So every lender is going to do things differently when it comes to this condo part. Just be careful, because if they can't order an appraisal until a building is VA approved or denied and a waiver is submitted, you are going to be in trouble, and your closing is going to be heavily delayed. A private road and shared driveways. Now, this used to be a pretty big thing, but since I think 2 years ago or so, the VA did away with private road and shared driveway agreements, so that's good. Flood zone, important to know, if you're on a flood zone, you need flood insurance. Water sewage system acceptability. If you are on a well and septic, they do have to get tested to make sure that there's no issues with the property. Repairs, we talked about. Any repairs required per the appraiser will have to get completed, or you can submit a waiver for that, and at times you could do an escrow holdback. Now, for new construction properties, they typically will have a 1 or a 10-year warranty. Obviously, the longer the warranty, the better it is. And I believe that's pretty much concludes the information on that. I know there's a lot of information, so hopefully you guys stuck to it to the end, because these are all things you need to know. And also note, one thing that I talk about with assumable loans, right, is that typically lenders that you're trying to get a second mortgage from will ask you if the lender on the first mortgage, right, the loan you're assuming, if they'll let you go for a collective loan to value over the notice of value. So this is where it comes in handy as well, even if you're doing an assumption, because it's going to be based on what the original value of the property was. So you may not be able to get a second mortgage for higher than that amount. Hopefully that did not confuse you guys, but I did a whole video on VA assumptions, 5 steps to assuming a VA loan. If you want to check that video out as well, make sure you guys hit the like and subscribe button, and I'll catch you guys in the next video.